Hello and welcome to the latest episode of Damien's Midweek Markets, the show where I talk about what's been going on in investment markets and what to look out for in the days and weeks ahead. Now, last week I talked about technical analysis and I mentioned certain key levels to look out for on indices like the FTSE 100 and the S&P 500. Those of you who have been doing their homework would have found some interesting price moves around some of the levels that I mentioned. So, for example, on the S&P 500, I said keep an eye on the 4,200 level, as that would be proving a sort of a resistance line and the market might react to it. The market did. We've broken a little bit lower. We're down around about 4,100 on the S&P 500. If we jump to the FTSE 100, if you recall, we were breaking above the 7,000 level. We were testing that key 7,000 level. That remains a key level in the market. We tested 7,100. We just peaked above it, and then the market reversed course, and it's now pulled back below that key level that stretches back into the past, and it's a key resistance line at the moment. If we break above it and hold above it, it will become, of course, support that the market could bounce up from. But at the moment, we pulled back towards 7,000. We went as low as 6,900 this week on the FTSE 100, but then we actually recovered some ground. So we're still around that 7,000 level. So you can see the markets are hitting some resistance. And part of what's been going on in this week in markets has been quite interesting, but at the same time, slightly unusual. Now, we went into this week and still that reflation trade that I mentioned in last week's video and podcast, that it isn't dead yet. It hadn't been put to bed. Growth stocks, although they had been showing some signs of strength in sort of recent weeks, hadn't done enough to put the reflation trade to bed. And so going into this week, we started to see the reflation trade accelerate slightly. But then on Tuesday, it was slightly unusual because despite the narrative being around inflation and inflation expectations ahead of some inflation data that would come out in the US this week, we actually saw on Tuesday the market do something that would perhaps are slightly unusual. On a day where you think inflation would be the big driver of markets, you would see the Dow Jones way outperforming the NASDAQ 100, so tech stocks taking a hammering. But that didn't happen. In fact, we saw that start to happen, and it's quite interesting if you read the Financial Times, for example. Occasionally they do pieces during the day that start to explain market moves. And they were a big piece about how tech stocks were seeing another wave of selling and breaking lower off the back of inflation expectations. But actually, when you got towards the end of the day, the reverse had happened. Technology stocks in America on Tuesday were largely flat, while the Dow Jones had fallen down at a point as much as 1%. So that didn't quite fit this idea that what was driving markets was this reflation trade. So what it probably was is a bit of a rebound, a bit of a relief rally for technology stocks. Lots of people started to say, is that it for the growth stock sell-off and the tech sell-off? Are we now going to see those pick up once again? People seem very keen to have growth stocks and technology stocks, all the things that were winning last year, to be winning again and driving the markets much higher. But as I say, it was a slightly strange narrative. And what we had, if you go back to Monday this week, or if you look at the US stock market, so for example, if you had the S&P 500, we had around about 44% of the stocks in that index hitting 52-week highs, which is obviously a positive if you're looking at a sort of a breadth in markets. But by Tuesday, that had fallen down to around about 2% in terms of the number of stocks hitting 52-week highs. So we'd gone from one of the highest readings on Monday in about 20 years to very low readings. So it shows you just how quickly narratives can change in markets. Now, other odd things that have been going on in markets, completely the other side of the world. For example, Taiwan, we saw the stock market fall 8% during the day trading over there, which was the biggest fall, the intraday fall, since I think going back as far as 1969. And that's off the back of the idea that they raised their COVID alert level. So maybe the possibility or the fear of future lockdown. So you're seeing we're getting some strange market moves, and that is feeding into some increased fear that's out there. investors are getting a little bit jittery about what could be going on, especially as stock prices are elevated on historical levels. Just look at the VIX index, which is a measure, people call it the fear index in markets. So VIX, that is historically around about 20. We've been going down into the low teens in recent weeks as the US stock market has been pushing towards new all-time highs. But we broke up towards about 23. We're just above 23 at the moment on that. So fear is creeping back into the market. And now, one of the reasons that we have seen that is that as I make this video, just beforehand, those inflation numbers in America came out. So the market was worried about inflation picking up in the US and ultimately globally. And we saw an inflation number that came out in the US that was way higher than expectations. And those expectations were already pretty high. So what it means is that as I make this video, and these things can change, the reflation trade has taken another leg higher. So US 10-year Treasury yields, which is a good measure of those long-term yields, which has broken down below 1.6% in the last week or so, has suddenly burst up to around about 1.66 as I make this show. And so that has had the impact on markets as you would expect, like the narrative normally would. The Dow is holding up, although it's currently in negative territory, only down about, I think, 0.2, 0.3% on the day. But obviously, tech stocks have taken another turn for the worse. They're down about 1%. Of course, you've got to see what happens by the close of play. So if we think back to last week when I made the observation that, well, would tech stocks actually find a support and push higher or break lower, the odds are looking like that the market is going to break lower for technology stocks. So that's the NASDAQ 100. And we're seeing a lot of deterioration in that breadth. So the number of stocks that are enjoying pushing up towards new 52-week highs, for example, that's been breaking down in the NASDAQ 100 to the point that it's almost in danger of turning into a complete tech crash and sort of a bit of a wreckage. So for investors, if you've managed to sidestep what's been going on in recent weeks and move away and move your portfolio out of technology stocks and exposure to these large cap growth stocks, then you have benefited, especially if you pivoted into those value stocks and those cyclical sectors out there like financials, like industrials. And interestingly, that is something that I did in my 80-20 investor portfolio at the start of April. And actually, I received a nice piece of feedback from an 80-20 investor member this week, thanking me for the changes I'd done in my portfolio. Obviously, they'd been inspired by those where I changed my portfolio at the start of April, favouring value, getting rid of those growth and tech stocks. And it's been to the benefit because obviously those stocks have been breaking higher. So we've seen the Dow pushing higher generally, and while we've seen the NASDAQ 100 and technology stocks break lower. Now, you have to be humble. You have to remember, go back, like I said, to Tuesday where you got the narrative turn on its head. These things can change very quickly. So we could have the fact that we might see growth stocks rebound or the reflation narrative completely change. But right now, the reflation trade is taking charge once again. And if you go back to recent episodes, I talk about certain ETFs to look at, the XLF, which tracks the financial stocks in the US, XLE, which tracks energy stocks, and XLK, which is tech stocks. Now, the first two have generally been doing better in the reflation trade than the latter, so the technology stocks. So you can see how they perform on a given day or over a given period of time to see what is perhaps driving markets. So it's a very fluid situation that we've got, but it's very interesting. And of course, we have to go and see what happens in the days and weeks ahead. Keep an eye on that 10-year US Treasury yield as well. Now, the other thing I want to quickly talk about on the show is the pound. Now, last week, again, on the technical analysis stuff I mentioned, I talked about the pound is bouncing between 1.38 or $1.38 and up to its recent high of $1.42. Now, we have been in that zone for a while, and actually the pound strengthened this week and it rallied up towards $1.41, struggling to break that upside resistance that I mentioned of $1.42. And the reason it rallied was obviously because of the election results, which seemed to effectively back Boris and the existing government. And of course, we've still got this seeming economic rebound in the UK. So all of these things are being seen as net positive for the UK. And of course, as part of those election results, there is the view that a Scottish referendum is less likely, which again is stable for politics. So that means that the pound has been pushing higher, which is obviously negative for any overseas holdings you have in America in particular. So if you had a US technology fund, then it wouldn't have been a particularly great place to be in the last week. So a lot to think about, a lot of things to keep an eye on. Earnings season is still proving pretty positive generally, and Asian markets or Chinese stock markets are still trying to break what they've been trying to break a downtrend they've been in since about mid-February. So again, we're still seeing weakness over there. So that is it for this week on Damien's Midweek Markets. As ever, you can contact me via email, damien@moneytothemasses.com, Twitter, moneytothemasses with the number 2. Of course, you can contact me via Instagram, Facebook, and don't forget to subscribe to our YouTube channel.